There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We're going to teach you the processing.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.
Hey everybody, good afternoon. Welcome back to another StockTwits Q&A session. I'm Brittany Umar, joined by the man you all know, Scott Red Dog Redler, here to answer your questions live. You ready, Scott?
Ready as I'm ever going to be. What's today, Thursday?
It is Thursday.
All right, good.
Almost there. And this was a choppy day of trading. Of course, stocks managed to edge higher, but do you think this is just a pause before we possibly go lower?
It feels today, you know, I look at the landscape, I look at a lot of different charts, and I feel like there's a lot more broken charts than stocks that I'm like, oh, I'm going to play this for a breakout. And then I also look at a lot of the sectors. And in the sectors, I kind of see that, you know, there's more damage to constructive type of setups. So it was interesting today on StockTwits, people were asking me what's next. And I said to them, I'm like, listen, if someone put a gun to head, which is, I'm stealing that from Doug Cass, because that says gun to head, what's your thing? Which thank goodness is no gun to my head. What do we see first? 153.50 on the spider, so that's like 15.30.50, or do we see new highs? Because he said 153.50 or 157.50. I'm like, if I had to go short a gazillion spiders and be gone for 2 weeks, I would think that we would hit 153.5 before 157.5. And if you look real quickly at the chart of the S&P, and we talk about trends, and look at this macro trend. Macro trend all the way back since September. You know, beautiful trend. If you are, a market sitter versus a market timer, you haven't had any problems by, buying the S&P 500 or playing sectors within there. Then you've had a few intermediate trends. If you remember last year at this time, this was your intermediate trend. And right around this time was when we had that head and shoulders. Here's your left shoulder, here's your head, here's your right shoulder, and we broke. Remember, we broke for like, I think this was 8-9% to the downside coming into May. I think the low here was actually in June. So with that said, a really nice first quarter move, which is kind of like what we saw so far this year. Then it got a little choppy in March. And then in April is when it corrected a bit, then made a lower high. And then that's when things added up and we saw a down move. So, let's just talk a little bit quick, a little bit, I guess, sooner. This was the last trend going through the summer, where you did see, a high, a lower high, another lower high, and this is where we broke in the fall after the election, or right around the election, and then we held it. So with that said, this has been a pretty unbelievable move, and if you fast forward to the first quarter, okay, where we are now, same thing. Here's how we started the first quarter. This is when we broke above this downtrend right here, okay, held higher, digested it. This was one trend during the Italian election situation that we wound up pulling in like 45 handles, regrouped, went sideways, went again. Then you had a little bit of a micro trend here. Okay, this was the Cyprus scenario that we wound up, selling off a little bit, and then we came back up, made a high, and then we just broke this, what was this, like 1560, which was the old highs. So with that said, I do think that, back there, this is a little bit problemsome, okay, for the short term. Okay, you had this small trend, we broke below it, but I would say that if the bears really want to stay in control, they probably don't want to see a close, above 156.20 to 156.40. Some people are saying they think that we, continue lower, okay, then maybe bounce up a little bit here, create a little bit of a head and shoulders pattern, with this 1530-ish being the neckline, and then perhaps going to move down to more macro. I'm drawing a lot of lines in here. It looks a little squiggly. But overall, this is what, if you want to look a little forward, this is what potentially could happen if we see some continuation here into maybe the jobs number next week, a little bit of a right shoulder, and then this trend line could potentially break, and then you see a bigger correction. But for right now, it seems as if we had a little bit of a feeble bounce back, but it wasn't really potent where people were jumping in with both hands saying, I got to buy this dip, let's wait and see.
So with that said, let's answer Kalani here, who's asking if it's time to short the spiders.
Is it time to short the spiders? Well, in front of a jobs number, it's a little tougher. So what I did is I was net short yesterday, and I was at some points net short today, thinking that if we broke below the low of the morning, which I believe was like 155.30, that we would get some kind of push to test yesterday's low, and it didn't happen. So with that said, into the jobs number, I'm like, okay, I'm not going to just go short because I'd rather see what goes on. So what I did is I bought the 155 puts for next Friday, thinking that if we're going to get continuation to yesterday's break in the S&P, and maybe we get a day or 2 or 3 of digestion in some of the weaker sectors, that by next Friday, we break 155 and test that 153. So by buying the 155 puts, I was going to do a put spread, but I didn't. Maybe I'll add that end of it tomorrow. I then get some exposure, that if we do break, if North Korea does something crazy, if we continue, then instead of, going back and forth, shorting the spiders and holding things overnight into a jobs number, I'd rather just have my risk premium paid. But I also have a few longs because I do think some things are worth staying with. But as of now, you can be, short the spiders, but just know if we go higher, the risk is limitless, if it happens overnight, whereas if you buy puts, potentially your risk is premium paid.
Right. We have Use Guy here saying Use Guy. No, it's a great name. He says, big engulf and small consolidation without a new low. How do you handle a day like today? What was your day like?
Well, this is an inside day. Okay, you take time to somewhat absorb what yesterday's move was, and it didn't take back too much of it. But let's go just quickly to the SPX because I didn't mark that one up as bad. You look here, and all in all, you look at, look what took place here. Okay, remember, this was again like the last time that we had a little bit of a corrective phase, big engulfing bar to the downside, and then all you had here was an inside day. Remember this little inside day? Some people who were looking for follow through to the downside got caught. People who were looking for a little bit of a bounce, okay, played it. And then if the bears had any control, it would have not have really taken back this halfway mark of this wide range bar. Okay, but it did. So that had to give the shorts a little pushback before we made new highs. And now here, it's a little different. Okay, this bar isn't really as potent, first of all, as this one, which should have given you more direction to the downside. It's more like this one, where you didn't even get that. So I'm trying to just coordinate patterns here. And at this point, here we are in the scheme of things, still very strong. We'll see what happens with the jobs number. I'm sure a lot of people have stops here at the previous high. And I would say if we start taking out this little area, you're going to see that move that I was talking about. Here's 1540, here's that prior breakout, and this is your 1530. But as of right now, this doesn't look that ugly, but a lot of the other sectors underneath that we talked about earlier in the week look like they broke first, like the Russell, the transports, the home builders. They all had 3 hard down days. So if the market wants to play catch up, there are many reasons why, including high beta tech that also looks weak. Right.
You're actually taking the words out of my mouth because if you watch Morning Call, you know that all week we've been talking about the weakness in the Russell and the transports. And we have a question about the transports here from Peltrade asking if it's a good idea to buy the IYT versus today's low for a 2-point swing back to 108.75.
I think you can. I think that if you sold when we broke the accelerated trend line, that now there's what I call the easy bounce. Nothing's ever easy, but I talk about what could take place on the bounce side before the bears need to make a stand for lower prices. And if you look here at the IYT, you'll see that if you did sell, okay, first of all, if you sold right here, the last time this happened was right here. Okay, so if you sold on this engulfing day, okay, because this trend somewhat broke, you had the luxury of buying back down here. Okay, and again, if it was going to stay weak, it would never have taken back this. So here we are at this little head and shoulders top. Here was Monday's action that we talked about, Brittany, about the engulfing day that took out Thursday's low, looking very weak. So if you stopped yourself out right here, even when it took out that Monday low, you then had the luxury of saying, okay, let me buy back a little bit. But if you want to talk about bounces, does this bounce look so impressive? No. But was it a small 80-20 trade red dog reversal? Yes, because look at the low here, 108.26. Was that the low? Or 106.26. Made a new low at 106.03, so really 20-cent stop, closed near the high. So I would say the bulls potentially could see a bounce back up to this 108.89, 109, and then right into this spot is where if on my 3-day down rule, if you covered your shorts, okay, potentially you could then play a bounce or maybe not play the bounce if you think it's dangerous. But if it comes back up to here, this is where you re-short it. Okay, So that's why entries and exits matter. If you got stopped out here, here's your spot to enter a potential long. If you got covered here, maybe look to reshort this broken trend line, and that trend line should hold it if we're going to see some more downside action.
All right, well, we all know that Facebook had its big Facebook phone event today, unveiling its home smartphone software. We have a question from Trader RL saying, what are your thoughts on Facebook? It looks good, breaking out declining channel.
Yes, and we've seen this before. And I'm not going to go start ringing the bell on Facebook, but I am long Facebook, and it tried to act well or better 2 days ago and was a little faulty. And then today it had some early volume, and I went with it. So if you look at the chart here, I'll show you, a little bit macro, a little bit micro. I've been talking about this potential cup and handle pattern. Okay, that's been taking a lot of time to work its way through, and they do. Okay, first one was this little mini one, with this being the handle coming into what's it called, the beginning of the year before rallying into resistance. And then from there, we've had this methodical move, grind to the downside, and it's been a little tough to handle. But if you didn't overtrade it, you lost a little bit here and there. So finally, question is, we broke above this descending channel here, and now we need to hold above it. The longer we stay above, just say 2650, and show some commitment to the break of this trend, because every time we've come to this trend, it's failed. Maybe we see some more upside. Next spot would be 2786 or even closer to 29. And I did have Greg Harmon on today. That's why there's a lot of extra lines. He thinks we could see 2930. And at this point, I'll stay with it as long as I see commitment. Not bad action today.
All right, let's move to Google, which dipped below its 50-day today. It hasn't closed below that level since October 18th. And we have a question from Trader RL, again, saying your thoughts on Google. Seems like it's vulnerable for a breakdown below 791.
Yes, if this stock was very strong, it should not have came back down below that area. Someone on the chat room today actually said, Red Dog, what do you think? Do you see a small head and shoulders top in Google? I'm like, let me take a look. So you go to the chart here, and you'll see in Google, entries and exits matter. The whole, strategic here. This was, I think this was either earnings or to start the year, gapped up. You could have traded against that entry, another entry, and then it's been stair-stepping higher. This is when Google got all those $1,000 price targets, the curse of the $1,000 price target. I remember saying, if you didn't enter here, like chasing it 800 and change is sometimes not the most prudent thing to do. So anyway, it broke this upper level. So if you use this as a stop, I know, some of us tried to buy it around the 50-day. What you had is a 2-day bounce. Okay, and then it was negated by this resistance here at around 819. So the question was, do you think this is a head and shoulders top? At this point, it looks like it could be a very loose one, not like the one in the textbooks. Here is your left shoulder, head, potential right shoulder, and this is your support that's been holding. So I would say, it held the 50-day by a thread today. If it were to break and close below 791, you do have a lot of room to the downside, and I don't know if it wants to discount before earnings or what it wants to do, but if you're just trading it, this 2-day move to negate this 2-day move, and I don't think it's healthy for short-term direction. I think it does tell you that we could break this level and go lower.
All right, we have one from Awful Trader.
Hey, well,
I know, don't get so down on yourself, Awful Trader.
It'll be half full, not half empty.
I agree. We'll just call him Trader.
We don't want to be like the self-fulfilling prophecy.
Exactly.
Or something like that.
Well, yeah, we'll call you a great trader. What are your thoughts on BlackBerry, he's asking?
BlackBerry, okay,
Yeah.
BBRY. I haven't really looked at this for a few days. I know that it does move for a $14, $15 stock. You look here, there's been some moves in this thing. And off the charts, we had it over the summer. Okay, Charco, unbelievable little call right there, around $8. From there, boom, went even further than a lot of people thought. Now the question is, what next? Can BlackBerry 10 live? Will it be a specialty item? Blah, blah, blah. At this point, technically, you have a small little wedge right here. And I would say if it breaks above this 1550 with some volume and authority, it could resolve to the upside, and then you have another level coming in here right around there. If it were to break below this 1461, it could come right back out into support. So at this point, it's getting tight. It could be on your radar from a macro sense. I don't know how it's going to last. I don't think that everyone's rushing out to buy a BlackBerry 10, but who knows? Well, I'm not doing channel checks with knocking on doors and saying, how's the sales going? But I have an iPhone 5, and I think most people might be switching to a Samsung versus going back to the BlackBerry that they got rid of 3 phones ago. But anyway, Wedge formation, we're traders. We could jump on if it resolves to the upside. We could short if it goes to the downside. So stay tuned.
All right, we're going to take a quick commercial break, and then we'll be joined by Mark Sperling to offer his point of view. Keep the questions coming, guys. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. Your membership to the virtual trading floor also includes access to our two very popular newsletter products, Off the Charts and the Price Point Sheet at no additional cost. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
Welcome back to the StockTwits Q&A. Now I'm joined by Mark Sperling. Welcome, Mark.
Thank you.
Ready to answer some questions we have for you here?
I am. I'll try at least.
All right. Well, we have one for you from Ultra Sharp asking for your thoughts on Coors. He says, long here or wait?
Yeah, I've been saying this on the chat a little bit all week, and I feel like we're at this interesting point where, in general, I'm not committing a whole lot of new positions across the board, regardless that some of these things are getting to the prices that I think make sense, yet I think the timing might not be the perfect timing. So for Coors, that is probably the point. I think it probably holds above its 200-day, which is around 52. So, risking 250 at this level for a move back up to, the 62 level as an investment or as a little bit longer swing, not a bad idea. I think you can wait a few more days. Nothing's telling me it's triggering quite yet. It's still below some key moving averages.
All right. We have one from Golden here asking for your thoughts on Wells Fargo.
Wells Fargo. It was the only bank today that really, not the only bank, but it definitely showed some, good strength today. You can make an argument it broke a little bit of a descending channel, so that's pretty impressive. Yeah, if it holds 37 at this point in time, that means that it should hold, and it should try to test new highs. It has not been the best in breed bank necessarily, but overall, to me, it looks good. Obviously, if this market's going to continue to the downside, most likely banks are not going to really perform the way they should. Banks have to show leadership again, and I think you're going to obviously get all the banks to recover. We're not quite there yet, but we'll see. We're probably trying to form some sort of bottom over the next week or two.
Right. Okay. So this name is
looks good.
At least, not among the worst out
not
there.
Among the worst.
At this point, that's a really good thing to say. Let's answer James here, who says, do you approach ETFs like TLT and TBT, which are strongly influenced by non-market forces, the same way as other equities or ETFs?
Yes and no. Yes, in the sense of I still use the technicals. That is the basis for how I get involved with the ideas. No, in the sense of a little bit of more micro. Do I think money's going to eventually come out of bonds? The answer is yes. That means, or out of treasuries. The answer is yes. So that means at some point you look to short the TLTs at key levels, or you look to buy the TBTs at key levels. So with that being the case, at this level, it is at a 2-3 month high after a big move from 114. Ideally, this is a good risk versus reward if you really believe in the macro philosophy, which I do, that money's going to eventually come out of there. More of a swing. If at this point you're going to be shorting it, I've bought a little TBTs, but not a real position at this point in time. If I'm going to be doing it, I would risk $2 for a move probably back down to 116 to make, possibly $4. So it's a nice 2-to-1 ratio. Obviously, this gets closer to 122, gets a little bit better ratio. We'll have to see how that plays itself out. I do think this eventually is at the top end of its 3-month range. To me, that's a place that should be a little resistance, meaning shorting is a decent candidate at this point.
Gotcha. All right. Well, Deere looked pretty good today. Closed up over 1%, and we have Interlake here saying, could you give me your thoughts on Deere?
Deere closed above, I think that's the 200-day. So recovered above its 200-day. What I think is happening right now is you're not going to get the V formations that I think a lot of people want in the stocks overall, meaning they snap below the 200-day, and then all of a sudden they snap above, and they're off to the races. I think you're going to get a little bit more U formations, meaning a little bit more backing and filling. So over time, it ideally stays above its 200-day, and it works itself higher. So right around here, using, I would say, the previous low, which is around 83, say 50-ish as a stop. Not a bad risk versus reward, but it still is in a downward trend at this point. But risk versus reward is not bad.
Okay, well, that's not a ringing endorsement.
No, I think that's where we're at in this market. I don't think you need to just, guns blazing, get all back to fully invested. I think there's a timing tool that we use, and quite frankly, it's not there yet. It will be there eventually. Just why put yourself in harm's way if you don't need to quite yet? Be in the best positions, be in the best ideas, be in the best technical setups. Not necessarily across the board spread out.
Right, and don't chase it, right?
Certainly don't chase. Not in this tape, not yet.
All right. Well, Interlake here is also looking for your thoughts on Dish, which did close up almost 0.9% today.
Dish. I actually do like the majority of these in the cable companies. I mean, you can look at CMCSA, Dish, Sprint, I think DirecTV. They all look very good to me. So they're all in the top third of the trading range. So to me, that means at the lower, as they hold that support, I think they're buying opportunities as long as they hold the key moving averages. Which for Dish, it is roughly, it's still holding its 21-day. It got above its 21-day, so it's fine. I don't know if it's going to go anywhere fast, but they still look good overall. This industry in general, the stocks in the industry look good.
All right. We have one from Andy asking about Netflix. He says Netflix is closing below the 50-day. Would you consider getting into it?
It's getting close. My rule, Scott's rule, we love, it's a leadership stock that 3-4 days down, you look for having a buy opportunity. Yesterday, I actually made some money on the long side at roughly the 165 level, back to the 170. We were talking about it. They're saying one of the reasons it was down besides market conditions is obviously the Icon rumor that he's possibly lighting it up, or he did lighten up, and he, rebutted that rumor. So overall, there's going to be another opportunity. I do think it stays above. Ideally, as long as it holds above 160, it is a good level, and it should hold support.
Okay, let's talk Sprint. TCB here says, do you still hold Sprint? I do. And thanks for pointing it out when it was basing. I
do too. I did reposition some of it. I'm not in my full position at this point in time. I'm still in a decent amount of options. It still looks good. It's not a barn burner. It's a little boring. But as long as it holds above 6 or 590, I think it's fine.
How about Amazon? This keeps making lower highs. Trader RL is looking for your thoughts.
Yeah, Amazon, this is, 258 to 260 is roughly the buy area. So you're basically in the price range that makes sense as a buying opportunity, yet the technicals are not backing it up yet. So I think if you're in the right price, I think the timing tools tell you it needs a little bit more time. So I'm going to be holding off personally. I might get involved for a quicker trade, but I think it needs a little more time for the chart to look a little cleaner. Any idea what levels you might be interested in? Well, like I said, I think the 258 to 260 is the level. I just don't want to sit in it with the headline risk over the next few weeks or the next few days if something comes out and we obviously the selling continues. So I'm just going to wait for the market to look a little bit healthier. And not that it doesn't look healthy. One day doesn't make a 1-2 day sell-off, but we are lacking a little leadership right now, and that's telling me no need to just throw on positions just for the heck of it. All right, how about the oils? Manax here says, what are your thoughts on oils like EOG and PXD? EOG and PXD, both have really broken down a little bit. It's EOG is now below some key moving averages. I would say it's probably going to retest its 200-day, which is roughly around 117. But again, third day down, I'm not going to be the guy that's going to be looking to short it. If it doesn't get to if it's at 120, I'm not going to be shorting. I think you missed the easy opportunity on the short. You're probably going to have to wait a few days. And I think the same thing with PXD. If it rallies back to the 122 and the market still seems a little weak, that will be the opportunity to re-short. But that, again, seems like it might want to test. I think it's going to stay above its 200-day, but it might want to get maybe down to the 115, 114 level before it tries to recover. Avoid for now, from the long side at least.
All right, need some time also. Okay, so we have Mab here saying, what's your take on CLF?
Cleveland Cliff. It's a dog. It's a dog. It's a dog that might be trying to find a bottom. Maybe, you can maybe make an argument that it's trying to get above one of the key moving averages, 8-day moving average, which really hasn't been above now for a better part of 2-3 months. If that is the case, I will probably trigger long. It probably fills the gap a little bit. So roughly, ideally above 1950, 1975, possibly might be an okay long, back to 21. Percentage-wise, not a bad move. 21.20, filling the gap. But overall, it's a bottom fishing in a tape that relatively we're just about at highs. Not the best way to play, make money in this tape.
Right.
I don't know what I'm saying. Long day, Britt. Long day.
Don't worry. You're powering through here. We're getting through a lot of questions. We have one on Alexion Pharmaceuticals, ALXN. He says, RL here is saying it looks good for a breakout above 125.
That's definitely a swing if you're looking for that type of time frame. Biotechs are huge. I mean, they are, it seems like the best in breed. Amgen, even though I'm short on the VTF, and really that's just for a trade, ideally back down to 102-ish. Amgen, Celgene, BIB, ALXN, RAGN, keep going down the list. Biotechs are very strong. They look very good. It did just have a move, 15% move from 90 to back to 100. Let it base around 100 for minimum a few days, possibly a week or two. If it can hang above there, then you might get a move to 105, 107. Trying to, I think that's a gap if I'm correct. Just about a gap, back to 110. Needs some time to marinate in this area. So I would wait. Comes back down to 95. I think it's a much safer buy for you to get back involved.
All right, Best Buy had a huge day today after announcing that it was going to be offering a 30% discount on iPad 3s, plus has a deal with Samsung coming up to have kiosks in the stores. What are you thinking of Best Buy now? Too
late to buy. Look at the weekly chart. You can see it possibly could get to, daily doesn't really tell you anything because it just looks great. The weekly, in my opinion, it could go a little higher to back to the 200-day moving average, which has not been above since 2011. This is a company that, quite frankly, they were talking bankruptcy the beginning of the year, and it's obviously already up, 100%, from 12 to 24, over 100% for the year. A little bit too late to just take a stab at it here. 27 and change is the 200-day on the weekly. Keep that in mind. Technically, it still looks great. Today was the day to obviously get involved somewhere and trade it. And I didn't. I missed it. It happens. It happens. If you missed
Can't catch them all.
If you missed it, don't chase it. Not in this tape.
So then I shouldn't ask you if you think we might get continuation tomorrow.
In Best Buy?
Right.
You know what? I keep saying this. This market is muscle memory is very bad in this tape. Meaning, what's strong one day seems to be weak the next, or at least for part of the day. So in that respect, yeah, I don't know if you're going to see strength tomorrow. Maybe. But the reality is you're not getting that consistency across the board. I like, versus January, February, and certainly the beginning of March, we were getting that consistency. Strong one day breakout, gap down, pretty much you get that follow through the next day to the upside. We have not gotten that over the last 2-3 weeks. That's a little bit of a yellow light to tell me take a step back, hence why I'm giving you the little bit of caution sign. No need, a lot of these stocks are one-day wonders right now, and then you just go back into bases. Got to be a little bit smarter on that. I think you missed it.
All right, well, keep the questions coming, guys. We're going to take a quick commercial break. We'll be right back.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, we teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.
Just talk. Just give me a...
Hey guys, welcome back to Q&A. We're just having a little technical difficulty here, but I'm gonna get your questions pulled up and Mark?
I will. So let's talk about the IWMs for a second, because I think a lot of people are, questioning where this tape is and what's actually happening. And right now, this was the telltale over the last few days that why we're showing a little bit of weakness, where there was a little bit of a caution sign in the tape overall, and that's telling me we just needed a break in the overall market, and that's okay. Breaks are good. We have not had any real sell-off in the last 3-4 months. So everybody's expecting a 5 to 7% sell-off that would be healthy. I don't think that's happening the way everybody wants. I think this rally is still hated enough, and not everybody's still underinvested, that I still think we're fine. Headline risk is the only thing that really can, derail us to a real extent. But a week or two down at this level, and I think we're going to find some nice little clean bases for us to really get involved. Don't get too panicky, and certainly don't be looking to short, down here. Wait for this rally today, and if we have a rally tomorrow, that might be the opportunity for next week for an opportunity to short, because I think you're going to get some digestion over the next few weeks or week and a half before earnings starts to really kick in, and then you'll start to see the volume in individual stocks. And again, we're in that market where you do get some pre-announcements. We had FFIV at the close today, certainly cloud. So, CRM, that's GGIV. That's down, I think, 12, last time I looked, $12, $13. CRM, I know Juniper, JDSU, some of those are in the same category. Maybe it's showing weakness overall in the overall sector, or quite frankly, it might just be an individual play, which FFIV seems to pre-announce a decent chunk past a few years, and we'll have to wait and see how that looks. But understand, earnings are in a week and a half. That's Alcoa kicks it off, and we are in pre-announcement time, so you want to be a little bit cautious.
And we know that Microsoft edged lower during the session after Bank of America Merrill Lynch downgraded it today. How do you think that looks right now?
Microsoft, it's like the old dinosaur. Microsoft doesn't do anything. From a trading perspective, it's too slow for me to really even talk about. I do think it could probably grind higher. They are always late to the party in just about every product launch or everything they do. And to me, that just means no need to really overtrade it and analyze it. Around 27.50 seems like it's trying to hold. That's probably the fair level. And maybe it gets back to 30 by the end of the year. I don't think it does a whole lot. It does do a good dividend, so from an investment it's a little bit different, but from a trading perspective, not something that needs to be on the radar fully.
What about precious metals? Because it seems as though lately, no matter what, we keep seeing this weakness in gold. If you take a look at the GLD, what are you thinking right now?
They definitely, the 1550 level, 1600 did not hold. 1550, 1500, 1550 is the next level. Not sure it's holding right now. Technically, certainly a broken pattern. Look on your weekly. This is what we're seeing on the weekly. You could go a lot lower, but this is really at the bottom end of the weekly range, 148.53 on the weekly. I'm still not convinced we're going to any sort of rally, and it seems like 1600 at this point will now be resistance. But I do think gold will recover at some point in time from a trading perspective. I'd let it settle out personally, and nothing technically is telling me it's a buy. It's more of a short, even though today I was a little bit long it. It's only a trade here and there. It's still a broken pattern overall.
All right, going back to the financials for a second, what are your thoughts on Goldman Sachs?
Goldman Sachs. I was very bullish on it on the pullback, around 152, from 160 all the way back to 150. I caught this move about 2 weeks ago, and then obviously, retested. It's now below some key moving averages. Back to if it gets to 138, 140 to 138, 137-ish, I'll be very bullish again because I do think it, enough of a pullback, enough 15% pullback, something to that extent, for us to get involved. We'll have to see if that happens. Banks might find a bid before that. Obviously, you're looking at the 200-day. I don't think we've retested at this point in time. I think there's too much money underneath this market, too many bids for that to happen. But you never know. Right now, technically, it is an avoid from a technical point of view, but the level I'm looking at for it to hold or for a perfect buying opportunity for me would be roughly around 138, 137-ish. If it gets down there, I think it's something that will, obviously bounce back at some point in time after that.
Trader RL here is noting that European financials look yucky, and it's the great term for it.
You definitely have some kids you definitely have some little boys or girls at home. Yucky.
Right.
Good word.
But despite them being yucky, he wants to know your thoughts on Deutsche Bank.
Yucky on Deutsche Bank. Yeah, it does look yucky, as my 4-year-old would say. You know, it's the same thing. We're at the point where technicals certainly matter, and the technicals aren't showing that the banks have the leadership they had a few weeks ago. So that being said, am I looking for a buying opportunity? If they break some descending channels, possibly. Right now, nothing's telling me to get long in any sort of capacity except from a trading perspective. So right now it's still a beat down and it's below some key moving averages. I agree, it's an avoid.
All right, JJDV says, what do you think of ALU? At what point would you consider this a viable buy?
ALU. Coalucent, huh? I haven't played that in ages. It's a $1 stock. A lot of times $1 stocks stay $1 stocks, and they're there for a reason. Lucent, I have no idea what products it has in the pipeline. You know, it gets back above maybe 160, maybe move back to $2, $2.10. So if you like to trade these little guys, I would say, you know, against 120, 130 is where you can look to get involved, possibly move back to 180. Not a bad risk versus reward. Again, $1 stock, you know, it's not going to move as fast as everybody wants. So keep it on the radar, certainly.
All right, how about Sony? Warm Trade Winds here is asking if the 21-day is a good entry point.
Sony, am I looking at that? Yeah, I would say it actually looks good. Obviously, it's something that doesn't trade as much as probably most people like, but it's had a good year. From 11 to 17. I know I believe there's a new product coming out. I don't know if it's the Sony, the PlayStation 4 or 5. I know they have a tablet coming out. So they have some products in the woodwork. And obviously, you never count out Sony, even though it really has not been in vogue for a long time at this point in time. But chart-wise, it looks pretty healthy. As long as it roughly holds above 1550, I think you're okay.
Okay, we have one from Travel to Paradise asking for your opinion on JCPenney.
JCPenney. This is a stock everybody loves to hate. It's heavily shorted, so it is vulnerable to short squeezes. I don't know if they're going to come anytime soon. At this point, at this level, it's either going to be dead money, or I think it's more of a long than a short. Yeah, it could get down to 12 possibly, but overall, I think with it being such heavily shorted, I'm not looking to. I would be looking more of a long and using a tight stop. Maybe, you know, the previous low of around 14 as a stop. If you're going to get involved, risk $1 to make, you know, possibly 2. Vulnerable to short squeezes, so keep that in mind. Heavily shorted.
All right, looks like you have to be on your radar with that one.
Yeah, it's always on the radar.
On your toes,
Ron Johnson. Everybody loves to hate him at this point in time, but we'll see.
Well, let's move on to another one from Travel to Paradise. We haven't talked Bank of America yet, and he wants to know your resistance and support levels in Bank of America, short and long term.
You know, it didn't hold the 12. Every whole number is the resistance and support. So 11, it's holding. Gets back down there, I'm backing up the truck and, you know, really getting involved probably heavily. I think it's probably going to teeter around 1150 to 1250 for a period of time until the banks try to recover. I think by year end, it's higher than this overall. Here's the weekly chart. You can see very much intact. I would not be surprised to see 1450 to 15 by year end. So ideally, on the next, you know, 1-2 day pullback somewhere on the weekly, maybe 1130 is a fair buy, using 11 as a stop if it gets there. If not, just a little bit more time is probably needed.
We've gotten a question on Herbalife in a while. We have one right here asking for your thoughts on HLF.
It seems like headline news doesn't really matter as much anymore. It's obviously the battle of the big boys in the hedge fund world, and you know, technically it's actually looking okay. There seems like a bid certainly underneath this, you know, stock overall. I don't know if it's going to get the short squeeze that everybody wants. At some point, probably does, but right now, I think it looks okay. It's not something I'd be overly concentrated on. Against 36, it's not bad.
Okay, Warm Tradewinds is also looking for your superb technical analysis. He made sure to note that on SRPT.
Give me stocks that I hate to trade. SRPT.
Maybe that's why I complimented you.
No kidding. I'm sure. And you know what I could say to that? No, I'm just kidding. I'm on air. SRPT, I do not like how it trades from an intraday point of view. Technically, it was a buy. We talked about it. Probably around, was it 27 to 30? Probably around 30 area. It seems like it's trying to get back into, play again a little bit. It's grinding higher. It doesn't seem like it's as wild as it was. So overall, if it gets back down to, if it tries to hold this 21-day moving average, I'm game to be back involved. But understand there's headline risk involved. It's it was obviously a wild one at one point.
Right. Mojo here is asking what your thoughts are on Solar City, SCTY. He asked, what are your thoughts on SCTY at 18-ish support? He'd like to buy its support rather than break out over 20.
A new issue that Elon Musk is involved with. It seems like it's a long-term plan. It seems like it's a winner. It's holding in as the solars compared to most of the solars. It might become a leader in the group. We'll have to wait and see. I don't know enough about the company to really make that determination. But technically, as long as it holds, I think really roughly 17-ish. I think it looks okay. Top third of its trading range.
Okay, one more from Trader RL here asking for your thoughts on the home building sector, Lowe's, Home Depot, XHB.
So Lowe's looks good. It's top third of its trading range. Home Depot looks really good. It hasn't really gotten dented at all on this tape. The home builders have definitely taken a little bit of a pullback. The question becomes, is this pullback basically an opportunity to just get out or an opportunity to get in cheaper? I don't know yet. I have taken a little bit of a stab at some tolls, just starting the other day, figuring it should hold. Some moving averages, it didn't hold. It's 200-day on the daily, but if you actually look at the weekly, it's right there. And to me, we'll have to wait and see. Probably give it a little bit more room to the downside, meaning probably around 30, 50 maybe from this lot that I bought, to see if it can maybe make a move back to 33-ish. I do think at some point it's going to, go higher and end the year higher, but it's just a matter of from a trading point of view. It's always a little tricky, those home builders, but I did take a stab down here with a very controlled stop in place.
Ben C. Banks here has a question about your personal process. He is asking if you have your process and rules physically written down somewhere.
No, because I've been doing this so long. When I first started the business, certainly. Do I think you should still write it down? Yes. I think my best trades always are when I have risk versus reward defined before I get involved with them. So most of the time they're in the back of my mind. I know I'm risking $1 to make $3. I have the prices in mind. I back in how much, how many shares I'm going to take, how much I'm willing to risk. I'm willing to risk $5,000 to make $10,000. Whatever the numbers are, that's how I look at an idea, and that's how I go about a trade. That's what I do consistently over and over again. For me, 16 years, 17 years in the business, it has become natural. For those that are, new to the business or really don't have that same philosophy, I do think it's something you got to really write down, and it's practice makes perfect. And quite frankly, it's never going to be perfect. You're always going to be working at it, and you're always going to be ideally tweaking it and honing it to make sure it works for you, because what works for me doesn't necessarily work for another trader. Risk versus reward is key. Something obviously we press in a lot of our education courses. You have to go into an idea with that. If you don't, you're basically just chasing the momentum. And quite frankly, in this tape, chasing the momentum one way or another, you're going to get hurt. You need some conviction to back it up.
All right. Don't they always say it's good to write those kind of things down?
I think so.
Write down your personal goals. You're more likely to achieve them.
Yeah. I mean, I write down I do all my work on a piece of paper like an old school guy, like a dinosaur at this point in time. And I can hold it up. It's just all these check marks. I go through my 40, 50 stocks, and I circle my top 3 or 4 that I want to play for the day. And in the back of my mind, I know the levels I want to look at them and my perfect prices. So, yes, I would say it's a rule of thumb, always write it down. Good preparation is really the best way to find success, and that's one thing I would always preach.
All right. Well, thank you so much, Mark, for answering all these questions. Thanks, you guys, for bearing with us with our technical difficulties here. We made it. And have a great night. We'll meet you back here next week.
There's such a fine line, making money and losing money in the market.
We want to teach you the concepts.
You have to be okay with the type of trader that you are.
We want to teach you the processing.
This is what really gives the meat and potatoes to it.
We're going to teach you how to.
The bottom line is you want to make money trading.
I can promise you that I can make you a better trader.
Join T3 Live at the Boca Raton Hotel and Resort April 26th and 27th for an exclusive trading education event. Sign up now.